I don't think that the silver bull market has really started. I think we've seen signs in the last 4 weeks that leadership is changing from gold to silver. But to be honest with you, I don't care what I think. If I have a speculative position that's up 400%, where I haven't seen real improvement in the underlying company, with the exception of the commodity price, I've learned to take my money off the table. A circumstance where I can sell between a quarter and a third of my position and eliminate all of my downside in return for giving up a quarter or a third of my upside seems like a hell of a trade to me.
The precious metals sector continues its extraordinary bull run, with both gold and silver posting another week of substantial gains. Since launching this unprecedented rally on Monday, August 18, 2025, both metals have achieved 6 consecutive weeks of advances. But it's silver that has truly captured market attention with its spectacular outperformance. Silver has seen its price more than double over the last 4 years, according to a SentimenTrader note shared with MarketWatch, marking only the 6th time a move of that magnitude has occurred since 1973. Legendary resource investor RickRule is executing the ultimate profit-taking strategy in silver, arguing the metal has already moved past the crucial, hated phase. He sees silver heading much higher, but the easy speculative money has already been made. As a result, Rule has been selling off between a third and half of its positions, where gains have topped a massive 400%. Crucially, Rick is maintaining stakes in proven, high-quality silver producers and streamers, such as Pan American Silver and Wheaton PreciousMetals metals. If the market is already rewarding stocks as if the yes answer has arrived, he takes money off the table, calling it free money. He predicts October will be extremely active for speculation, making it an ideal time to reduce risk. Regarding his current strategy, RickRule emphasizes he is selling a quarter to a third of his gold explorer and developer positions after sharp gains. He believes the US dollar will lose 75% of its purchasing power over the next decade, with gold potentially tripling in price. Before we dive into RickRule's sharp insights from their latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
Silver is unhated. And as you rightly point out, the easiest money that's made in speculation is the move from hated to unhated, which has already occurred in silver. I believe that silver has farther to go, but I'm also a disciplined speculator. So in my speculative silver stocks portfolio, I've sold between a third and a half of my position. I've maintained my positions in the hybrid silver companies, the Pan Americans, the Wheaton Precious, and I've maintained my positions too in the high quality Latin American producers, the Buenaventuras, the Peñoles, that sort of thing. But what I laughingly call the silver animals, that whole panoply of silver exploration stocks that have some silver in the ground but don't have the means to produce it. I've been a fairly aggressive seller of those. To be clear, I think the complex goes higher. I don't think that the silver bull market has really started. I think we've seen signs in the last 4 weeks that leadership is changing from gold to silver. But to be honest with you, I don't care what I think. If I have a speculative position that's up 400%, where I haven't seen real improvement in the underlying company, with the exception of the commodity price, I've learned to take my money off the table. A circumstance where I can sell between a quarter and a third of my position and eliminate all of my downside in return for giving up a quarter or a third of my upside seems like a hell of a trade to me. I think October is going to be a blisteringly hot month in speculation, and I'm using it to reduce my speculative positions. Most people, particularly younger people than me, would try to squeeze every farthing out of their position. I've learned to be different. I've learned to pay attention to the market in reverse order. When the momentum is, I do what the market demands. Right now, the asks are getting taken out. So I'm supplying some asks. 2 years ago, the bids were getting taken out. So I supplied some bids. I accommodated the market. When people wanted to exit, I was a buyer. Now people want to enter, I'm a seller. I was looking today at Paul Harris' work for the Mining Journal about all the small silver financings that are taking place. When the companies are trading large amounts of their equity for cash, they're telling you that they think the cash is worth more than the equity. When they're using their money to buy in shares, they're telling you something different. And you're wise to learn. Now, I'm not trying to say that the money that they raise can't be put to good effect to lift the fortunes of all the shareholders. All I'm trying to say is that when a company with a $100 million market cap does a $25 million financing, they're telling you that they view the money as being worth more than the stock. And you're wise to listen. I am selling between a quarter and a third of my positions in the gold explorers and developers because they've given me too much too fast. I believe October is going to be a blistering hot month for the gold stocks, which is, from my point of view, a wonderful time to sell some because there's bids. I believe the gold price goes much higher over 10 years, but that doesn't matter. I have the ability to de-risk my portfolio right now, take all the risk out of the portfolio. When I'm at what I call the point of no concern, where I have a position where I've sold enough stock to recoup all of my capital and pay the tax, I become extraordinarily patient. And I'm putting myself in that position during the month of September and October. I believe that the US dollar, in an absolute sense, loses 75% of its purchasing power over 10 years. Paradoxically, I think it does relatively well compared to other fiat currencies. In other words, I think it'll do okay against the euro, okay against the Canadian dollar, okay against the Australian dollar. But in an absolute sense, I think it loses 75% of its purchasing power. I believe that it's likely that gold's rise in nominal terms, US dollar terms, mirrors the decline in US dollar purchasing power over 10 years, which means that I think that the gold price in nominal terms could easily go threefold from here. I believe, too, that over time that'll be reflected in the equities prices. I think that you look at the decade of the 1970s for the analog. That's what I think. Thinking's free. I have the ability right now to monetize the fact that the junior gold stocks have gone from unloved to loved. And I have the ability right now, without disrupting any of the names, to sell enough of my position that I have the rest of my position, which is substantial, for free. I have the ability to eliminate the downside in my speculative position by giving up a quarter of the upside. And that's a hell of a trade.
It is a new era for the once struggling junior mining companies. As gold and silver and other commodities hit new highs, miners in the sector are now able to secure capital for exploration and development, leading to potential new discoveries. Based on fundamentals, RickRule suggests that investors willing to take risks may consider high-quality development stage juniors like Abra Silver and Vizsla, although political risks in Mexico and Peru remain unavoidable for serious silver exposure. He mentions that companies like Fresnillo or Buenaventura carry strong assets, but they also face significant political risk. Today, Rick predicts that top-tier silver exploration plays are already too expensive. He suggests looking at out-of-favor sectors such as sulfide nickel or rare earths, rather than chasing what's popular now. Rather than joining the rush into industrial metals, RickRule argues the real bull market is still in precious metals. He expects a sluggish global economy to delay an industrial materials boom for 2 to 3 years. With true inflation running closer to 8 to 9%, he warns that rising capital expenditures make new projects costly, leaving existing long-life assets far more valuable than most investors realize. Let's get back to the interview.
If you're willing to take some risk, probably the development stage juniors, high-quality development stage juniors, Abra, Vizsla. If you have some courage, right now, Aya. But I think I'm going to interview Benoit LaSalle. You may know that a short report was published yesterday, and I'm hoping to interview Benoit LaSalle in the Rule Classroom and allow Benoit to give his side of the story. I will admit, too, I'm predisposed to Benoit. I was a large Semifo shareholder, and that had a very, very happy ending for me. But I think depending on the outcome of that interview, I would likely be an Aya shareholder. I love hate, and Aya is roundly hated. If you are willing to tolerate political risk and you think that silver is going higher, I count on both those scores. I think perhaps you look at Fresnillo, albeit the current president of Mexico has personal enmity for the family that controls that company. Perhaps you look at Buenaventura, but you expose yourself to real political and social risk in Peru. I think Pan American Minerals, by the way, is, irrespective of its silver assets, in pretty good condition. They sold some redundant assets, paid down some debt. They have worked on the assets that they acquired that required sustaining capital investments. So I would own Pan American separate and apart from its silver pedigree. I have a very large position in Wheaton Precious. And while I'm still selling other stuff, I'm still buying Wheaton Precious. You'll notice a 72-year-old's skew away from the penny dreadfuls, which is where I cut my teeth, more towards market beta than alpha. The most dangerous government is the one closest to you. In terms of the manifestation of political risk by dollars lost, The worst jurisdiction in my career was California, the state I lived in. The best jurisdiction in my career was Congo. So I start with the premise that all jurisdictions are lousy, that you need to understand the risks, not as presented by the nightly news, but rather the risks that are likely to impact you over time as a shareholder. Risks in Mexico around Peñoles and Fresnillo accrue to the fact that the president of Mexico is anti-mining, but she knows that the only economic engine in rural Mexico, other than narcotics, is mining. So she has to tolerate it, but she has a personal enmity towards the families that control Peñoles and Fresnillo. That's a real risk. The president doesn't like you. But if you're going to be in the silver business and you're not in Peru and you're not in Mexico, you're not in the silver business. You need to work through that. There's some low effort names in the U.S., Coeur, as an example, or Hecla, brand names for silver. But their 20-year return on capital employed and their investment allocation decisions have been subpar. So you need to juxtapose those two things. Do you want psychological security? Do you want momentum? Do you want a brand name? In other words, do you want something that might do well over 2 or 3 months? Or are you willing to take subjective political risk and get higher quality deposits in a higher quality geological jurisdiction? I just looked at the fact that we didn't buy it as an exploration project. We knew that there was a lot of upside, but we were able to buy 40 or 50 million ounces of silver with exploration upside for $2.5 million. We, at that point in time, wanted to say to our shareholders, this deposit is worth nothing at $5 silver and could be worth a lot at $15 silver. If silver does go to 15, this is a 10-bagger, at least for us. Rinse, wash, and repeat. We didn't want to focus on Diablios. We wanted to focus on the strategy of buying deposits that had had $25 or $30 million spent on them, buying $30 million worth of data for $2.5 million, and hanging on for dear life. In the early part of the 90s, when nobody was paying for optionality and they were giving away optionality for free, I decided to take as much of it as I could possibly get because it was free. And the strategy was to buy 10 or 12 or 15, if we could, out of the money silver deposits that had had large exploration expenditures very, very, very cheaply, which is something that we did. It worked out extraordinarily well. Had those assets stayed in Silver Standard, had the management of Silver Standard not changed, it's likely that the beneficiation of those assets would be being done today by Bob Quartermain. That didn't happen. To the benefit probably of everybody. Bob went on and did Pretium, and now he's doing Dakota. And the SSR guys have built a fine mining company, merging with Alisair. But as times change, shareholder strategies change. Everybody's looking for them now. The time you had to look for them was 5 years ago when they were cheap. Look what Tony McCooch did with Discovery. He went out when nobody cared about silver, and he bought one of the better high-quality silver exploration assets in Mexico. Spent a bunch of money on it. Did this sort of Toronto technique, just drilled the living S out of it. It would be tough to duplicate now. There's a lot of good competition out there. So for me personally, this is the time to be looking for sulfide nickels. This is the time to be looking perhaps for rare earths. This is the time to be looking for stuff that people don't like, not the things that people do like. If I'm going out looking for things that people do like, I'm assuming that I'm smarter than everybody else in the process. That's a dubious proposition, smarter than Lundins. I need to compete with them when they're not in the race. I don't think industrial materials, people are buying the industrial materials narrative because of geopolitics. We're in a precious metals bull market right now. I don't think we get into an industrial materials bull market for 2 or 3 years. There are a lot of headwinds in the economy. I think the very soft oil price and prior to 2 weeks ago, the soft copper price is a function of the fact that there is a much slower global economy than people are giving credit for. I think we will experience real shortages of things like oil, gas, copper, nickel, 5 years from now, 6 years from now. But you can have supply shortages if you have economically related demand shortages and you don't move price. So I think we have to absorb a soft economy for 2 or 3 years before we come into a real industrial materials bull market. I think the other thing that a lot of speculators don't recognize because it's not in their time frame is, first of all, that inflation is much higher than we believe it is. When Americans look at inflation, they think of the CPI, which I characterize as the CP lie. They believe that the deterioration of the purchasing power of their dollar is proceeding along at 2.5 or 2.6%. I think it's more like 8% or 9%. What that has to do with industrial materials is what is believed today to be an $8 billion capex to build a copper porphyry is actually an $11 billion capex. And that capex number is escalating at 8 or 9% compounded. That means that the incentive price needed to amortize 11 or 12 billion dollars is going up by 10% compounded. And that means that existing assets that don't need to be built, that are carried at book after a lot of depreciation with 25 or 30-year mine lives, are twice as valuable as the market thinks they are.
The prices of silver and gold have increased rapidly, and when you see this type of move, it suggests a correction is coming, which is healthy in any environment. The reason silver is so comparatively cheap against its inflation-adjusted price is that it is by far the most shorted commodity out there. Due to silver's dual use as money and an industry, it has been held down in price for years by manipulation via paper contracts. As investors navigate this historic rally, should they follow RickRule's cautious de-risking strategy and lock in gains, or lean further into the potential for an even larger upside in precious metals? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.